to talk about the tax implications for you this year of the one big beautiful bill passed on July 4th of last year. But first, 2025 ending numbers. Dow Jones Industrial Average closed at 48,063.29, year to date up almost 13%. S&P 500 closed at 6,845.1, year to date up 16.38%. NASDAQ 100 closed at 25,248.77, year to date up 20.16%. Gold closed at $4,336.50 per ounce, year to date up almost 65%. It was a big winner last year. US dollar index closed at 98.25, year to date up 9.43%. 10-year Treasury closed at 4.163%, year to date down 0.344%. And finally, the S&P Aggregate Bond Index closed at almost 225, year to date up 7.07%. Okay, HR 1 was signed on July 4th, 2025. By the way, this is not a political commentary on whether or not this is a good bill or a bad bill. Had it not passed and had nothing been done, tax rates for many would have gone up in 2026. So, number one, what it did was made the 2017 tax rates permanent. This includes lower brackets for most filers. State and local tax deduction, which we'll call the SALT deduction, was capped at $10,000, and now beginning in 2026, $40,000, and it will revert to $10,000 in 5 years if nothing changes. There are new deductions for tips, overtime, and auto loan interest. There's expanded child and standard and child tax credits. Charitable giving has changed. Social Security deduction will also, for those 65 and older. Okay, this is a chart I'm not going to go over at all, but basically the only people that lost in this would be the people making a little bit more than 416,000 a year. They would have gone back to 33%, but they're going to stay at 35%. But basically, most brackets, you're paying less than you would have if nothing had been done. A few other differences. The standard deduction would have dropped to about 6,500 if you're single, but now it's 14,000, give or take. These are not exact numbers. If nothing had been done, you would have gotten an additional personal exemption of $4,050 per person. The child tax credit would have gone back down to $1,000. Now it goes to $2,000. The SALT deduction. This is where people who live in high tax states would have really made out if nothing had been done, because their deduction for state and local taxes would have been uncapped. And the marriage penalty would have returned. Let's talk about the state and local tax deduction. Before the 2017 tax bill, this deduction was unlimited. You got to write off everything. But beginning in 2018 and through last year, it was limited to a $10,000 deduction. With HR 1, it's temporarily raised to $40,000 beginning this year. So if you're in a state that has high property tax, this will ease your burden. If you don't pay much in property taxes, not so much. Okay, tips, overtime, and auto loan interest. So currently, you got to pay taxes on overtime pay and tip income. Currently, you generally don't receive any deduction for interest on an auto loan. If you receive tips as part of your income as an above-the-line deduction of reported cash tips, up to $25,000 is allowed. There is a phase-out beginning at a modified adjusted gross income, which I will henceforth refer to as the MAGI, of $150,000 for singles and $300,000 for married filing jointly. And you've got to be an eligible occupation that's customarily tipped. Only cash tips will be considered. Overtime, similar to tips. It's an above-the-line deduction also, $12,500 for individuals and $25,000 for joint filers. Phase-out thresholds are identical to tips. Auto loan interest deduction. It's also an above the line deduction. I keep saying that because it's important. You can deduct up to $10,000 per year in interest cost. Phase out at an adjusted gross income of 100,000 for single filers and 200,000 for married filing jointly. And the vehicle's got to be American made. Now, here's the significance of the above the line deduction. A lot of times you only get to take deductions if you itemize. These deductions you get whether you itemize or not. Really important concept for later. I don't know if the IRS has released a list of customarily tipped occupations and rules for overtime. Expanded standard and child tax credits. The standard deduction under the one big beautiful bill raises to 31,500 from 27,000 in 2024. That's married filing jointly, I believe. If you are 65 and older, that means anytime this year, if you turn 65, you get an extra deduction of $6,000 per individual. It starts phasing out at 75,000 for singles and 150,000 for married filing jointly. These will be in effect from 2026 to 2028. The child tax credit is raised to $2,200 and it's indexed for inflation. It's effective last year onward. It also remains refundable up to $1,400, but that amount is indexed for inflation. Phase out begins at $200,000 for singles and $400,000 for married couples. Charitable giving. Okay, so charitable giving is generally deductible, but here's the thing. If you don't itemize, in most cases, in years past, you didn't get any kind of deduction for it. That changes this year. Beginning in 2026, if you're taking the standard deduction, you may be able to claim up to $1,000 in charitable deductions. That's no itemization if you're single or married filing separately, or $2,000 if you're married filing jointly and receive a tax benefit for it. Those itemizing can only claim deductible contributions that exceed 0.5% of their adjusted gross income. So for instance, if your adjusted gross income is $200,000, then your first $1,000 you contribute, you will receive no tax benefit. Amounts above that will. Social Security deduction enhancement. $6,000 in singles age 65 plus, 12,000 on married if both of them are over 65. And your age, whatever your age is on December 31st, that determines it. It applies to all income when determining adjusted gross income. Begins phasing out at 75,000 if you're single and 150,000 if you're married. It's effective this year, next year, and the year after. Okay, whether you support this law or not, it is certain there are changes that may need to be incorporated in your plan. If you don't have a plan, you should get one to be able to take advantage of the provisions of the laws. But this is not tax advice. Provisions will be ironed out in the fullness of time, and always consult your tax professional prior to taking action. Once you graduate, be it from welding school, engineering school, or law school, you're going to need a different plan for each of these stages that's tailored to your individual situation. In your working years, most important question, in my opinion, is, am I saving enough? And second most important, is it in the right place? When you get to the glide path to retirement, which I've labeled the last 10 years prior to retirement, will the USS Retirement be shipshape on the appointed day? Retirement, how do I avoid running out of money before I run out of life? And legacy, does what I worked hard for get to where I want it to after I'm done with retirement? It can be reached at herwirefinancial.com. I do in-person Zoom and phone appointments. I am licensed and registered across several states and can easily add states if there is a need. If you'd like to schedule an appointment, click on the Schedule an Appointment button in the upper right-hand corner of my website. You want to see more videos like this, go to my website and click on the YouTube channel button. It's that red one between the Facebook and LinkedIn buttons on that top bar. If your friends want more information, they can follow me on Facebook, LinkedIn, or Twitter. If you prefer the good old-fashioned telephone, 518-631-2569. Do not text that number. You and I will both be sad because I won't get it. Use the texting number below. Opinions voiced in this material for general information only, not intended to provide specific advice or recommendations for any individual. All performance referenced is historical, no guarantee of future results. All indices are unmanaged and may not be invested in directly. All data is believed to be from reliable sources. However, no representation is made as to its completeness or accuracy. None of this is to be construed as tax or legal advice. Consult your advisor prior to taking any action. This information is intended to be educational and not tailored to the investment needs of any specific investor. All investing involves risk, including loss of principal. No strategy assures success or protects against loss. There is no guarantee that a diversified portfolio will enhance overall returns or outperform a non-diversified portfolio. Diversification does not eliminate market risk. Okay, everybody, hope you had a happy new year, and I'll see you next time.